All right. Good evening. Don Winter here. Welcome to our webinar here on impact investing, kind of in our series of impact investing webinars. Really excited to share some news with many of you here today and really kick off what's going to be about a 2-day event we have going on here in St. Augustine, largely streaming virtually. So if you don't know what I'm talking about and you're saying, well, all I know about is this webinar, we'll be chatting more about that. If you are able to stay with us here beyond this webinar, I'm really the kickoff act tonight with a great keynote speaker coming later this evening, Lloyd Reeves, who runs Halftime Institute. And we have an incredible group of speakers joining us all day tomorrow into Saturday. And you can join us through all of the content from wherever you are here all this evening, tomorrow, and into Saturday. So welcome you to join. You can go on our website. We'll drop the link in the chat box as well if you're not aware and want to join us after this session. Hope you're able to. But what we're going to dig into here now are DLP's newest investment vehicles that we launched just a few weeks ago. Give you some updates and insights to what's going on in this crazy real estate market, what's happening here at DLP, and excited to do so. Before I dig in here fully, I'd like to take a moment to thank our veterans. Being Veterans Day, we've got, I know, a tremendous number of incredible servicemen and women here across the DLP community joining us here this evening. So we thank you. I speak, I know, for all of us on tonight and thanking you for your incredible service and for the freedom you help protect for all of us. All right. So with that said, here's our Barry DeGroot, our Chief Legal Counsel disclaimer, and let's dig in. So, all right. So for those of you, and probably not that big a percentage of you, but for those of you who don't know who I am at all, I am Don Winter. I'm the founder and CEO here at DLP. I have been running DLP for now 15 plus years. I've completed more than $5 billion in investments over that time and rapidly growing. And I am also, have to say, we're growing so fast, both here at DLP and in my personal life, I guess you'd say that picture I just noticed is dated, as some of you joined us at our last kind of event, end of September. I just adopted a baby boy, Jake, literally over the weekend of our last event. He's doing great. Thank you so much for your support and prayers and well wishes. And he is now about 8 weeks and doing awesome. So, I'm talking to you here for tonight from our St. Augustine headquarters, from my office, and we've got some of our closest elite partners, real estate operators here with us throughout the next couple of days, as well as we'll have hundreds of incredible investors and operators and team members joining us over the next couple of days here. With that said, what we're going to talk about here today, though, I'm going to finish giving you a little overview on DLP who's new and dig into what are investment vehicles we offer and what's happening here in real estate, why you should be interested in investing with us at this period in time. So this little chart slide here is Dlp Capital's flywheel. This is what DLP does. We have a number of different business lines, a number of arms to DLP, from real estate brokerage to property management to construction to lending to title. But at the end of the day, everything we do all comes back to this. Our organization of 450 plus team members, employees, serving 20 plus thousand residents, nearly 2,000 investors, revolves around what's on this screen. Investors such as many of you joining us here this evening invest with us into our investment vehicles. We take that capital and we invest it in housing. We do so as a lender, we do so as an equity partner, and we do so directly as an operator, as a developer. And then we go and we focus on scaling companies. Last year, I wrote a book here called Building an Elite Organization. And that's what we focus on doing, building elite organizations here at DLP and in the partners and operators that we lend and invest capital with. And if we do that well, we create prosperity for our team members, for our residents, for you as our investors, and for the real estate operators that we partner with and support. And that's what we've been doing for the past 15 years here at DLP. We're picking up momentum in our flywheel thanks to all of you and your support, and looking to continue that here this evening. Here's where we operate. We have a headquarters in Bethlehem, Pennsylvania, where I grew up. In the top left, I'm talking to you from that building. In the middle top of the screen, we are renovating that building. To the right in downtown Asheville is our new Asheville, North Carolina headquarters. We've got an office in Daytona Beach, and we recently opened an office in Orlando, Florida, and that beautiful property there that we own in Orlando. All right, so enough about DLP. Let me tell you a little bit about what's going on. Well, we'll tell you a little bit about what happened at DLP last quarter and tell you what's going on in the world of real estate today. Everything I'm going to cover for these next few slides is in our fall report, which has just been sent out. If you didn't get a copy of it, reach out to any of us. I'll put all of our info on the slide in a moment. We'll make sure to get it to you. It's a pretty detailed report that tells you everything you could want to know about what's happening in real estate, what's happening here at DLP. But I'm going to give you some of the highlights here this evening. First is that this past quarter here, we broke $2 billion in assets under management at DLP. That's pretty exciting, especially considering August of last year, we broke $1 billion. So it's been an incredible year here at DLP, again, thanks to so many of you. This gives you a little idea of DLP by numbers. We have 15,000 units that we own, residential units that we own. We have 1,900 families who've entrusted their capital with us. We've taken that capital, invested in over 700 loans to full-time real estate operators. We've invested in 52 communities that we own, rental communities we own, over $2 billion. We do over $200 million in annual revenue at DLP. We provide housing to 25,000 plus of our residents, provide capital to more than 200 real estate operators, and have over 420 team members here at DLP working hard as stewards of our investors' capital every day. Here's what we did specifically in Q3. We brought in $72.8 million of new capital from our investors. Again, thank you. We deployed that capital into 283 loans for over $221 million. We acquired over 2,300 new rental apartments and homes for over $300 million. And in turn, we exceeded our return targets and goals for all of our funds. Once again, you see some of those double-digit returns on the screen there in front of you. So we had a phenomenal quarter. Again, this is 90 days. This is what we did in just the last 90 days here, thanks to our phenomenal support. All right, so what's happening in real estate? How are we able to do this? It's certainly been an incredible real estate market. Any incredible market where prices and rents and so forth are going up at tremendous rates creates great opportunity, and also creates, of course, a number of challenges depending on where you sit in the housing market. So overall, property values and rents, as just mentioned, have grown tremendously. Home prices increased 18.1% year over year. That was the largest gain in home prices in the past 45 years. In addition, the month over month prices went up 1.3%. So prices went up over 1% just in the last month alone. Demand has been incredibly strong. Homes are selling fast. On average, across America, homes are selling in just 17 days. Pretty amazing. About 29% of all the buyers out there today are first-time home buyers. And a big percentage, in order to compete in this incredible market, have actually been paying all cash. Of course, those generally aren't the first-time home buyers, but are paying all cash. About 22% of all sales were all cash sales. So from a home buyer and a home seller standpoint, sales decreased slightly here this past quarter, but that's really because of a tremendous lack of supply. We believe that prices are going to continue to rise, making this still a great time to invest in housing. Demand simply dramatically outpaces supply. Inventory this past quarter went down 25% of home inventory on the market, which was already at an all-time low. So demand is incredibly low. And I apologize, one of the presenters who's on, I think, must be clicking on their mouse and not be on mute. So if you can put yourself on mute, much appreciated. All right, so in terms of one of the biggest drivers to the home market is new construction. So new construction permits went up 13.5% which is pretty great news. We need more new construction in order to create more supply and keep these prices from continuing to climb at the pace they've been climbing at. That's some good recovery from COVID. From a rental standpoint, it's been equally as incredible of growth. Rents went up 11.4% so far through Q3 in 2021. So we've seen double-digit increase in the average cost of rental housing in America through the first 9 months of this year. That's tremendous. That's very challenging for many renters with the incredible increase in cost of housing. And many of the markets we're in the South, rents have grown even higher, have grown into the teens so far year to date. So to give you an idea, over the last few years, rents on average have gone up about 3% over the first 6 months of the year. This year, they went up into double digits in just the first half of the year, and it's continuing to climb. So overall, in August alone, the average rent in America went up $25. The average rent right now in America is $1,539 per month is the average rent. So far year to date, to put in perspective, rents have gone up over $140 year to date from where we started to where we were just at the end of Q3. So all that to summarize to say rents have grown tremendously. That's good news for us as real estate operators in that income is growing. Challenging news for those trying to rent, especially those in need of workforce housing, where in many cases the rental growth has been the most significant. So as investors, which all of us in this meeting are in one way, shape, or form, these markets remain very, very strong. It's easy to sit here and say, wow, property values have grown so much. This must be a pinnacle. Property values must go down. I believe strongly, and of course, I, like none of us here, have a crystal ball. But I believe strongly that we will all be sitting here 1 year from today or 2 years from today, and we're going to be referencing when prices were where they were in late 2021 as a lower pricing and how much they've grown compared to looking back and saying, wow, remember when prices were so high in November 2021? I do not expect in any way, shape, or form that we'll be having that conversation. Pricing is going to continue to climb, both in single and multifamily properties. Not projecting they're going to keep growing at 18% a year, but they're continue to go up as there simply is not enough supply to keep up with the incredible demand of both multifamily and single family housing. So remain very bullish, and especially in the workforce housing segment, which has some great advantages. And even a recessionary environment is that the supply so drastically under supports demand. And when there's a recessionary environment, more people move down from Class A housing or more expensive housing into workforce, only increasing demand for good, affordable workforce housing. All right. So with all that said, what we do here at DLP is we acquire and manage affordable or workforce housing communities. That's what we do. And that's primarily what the Dlp Housing Fund does. It invests equity into affordable workforce housing communities. The new Dlp Building Communities Fund invests in the development and construction of new workforce housing communities. And then we have three funds, the Dlp Preferred Credit Fund, Lending Fund, and Positive Note Fund, that make loans to other real estate developers and operators to acquire and build housing that's affordable. So hopefully you notice the trend there of the focus on workforce housing that's affordable. We invest in creating that housing, investing in that housing in a number of different ways across our various funds. This is where we own real estate today. These are our communities that we own today. And the portfolio that we lend against, the loans that we have are across the majority of these exact same markets. So you'll notice a big concentration here in the Sun Belt region. I'm going to show you a little bit of example of what we've recently bought here this past quarter, as well as what we have recently sold. And then I'll give you some of the specifics exactly of the funds that we offer and help you to evaluate which of our funds could make the best sense for you. And if you are already an investor, make sure you fully understand our newest funds and how they could play in with your investment allocations with DLP. So in Q3 in the Dlp Housing Fund, which is our primary fund that owns real estate, owns about 10,000 rental homes for about $1 billion. We sold off two communities here this past quarter. The first one being a community we called Prosper South Bend in South Bend, Indiana. Big community, 739 apartments. We acquired it on literally the last day of 2018, which heads up to our investors and to our team members listening. The end of the year always is our biggest period of the year. We always end the year with a bang, and I don't expect to change that this year. So we acquired this property on the last day of the year in 2018. So we owned it for 2 years and 3/4 of a year. We purchased it for $41 million. We sold it for $53 million. We generated a 16.67% annual net return to our investors on this property, which was a challenging property for sure, but one that we did some incredible work on making it a great, safe, affordable workforce housing community, serving obviously a large number of residents in this local market. In addition, we sold a property we called Pepper Tree in Charleston, South Carolina. This was a 353-unit community that we owned for a much shorter amount of time. Actually, we owned this community for a little less than 1 year. We purchased it for $27 million, and we sold it for $37 million less than 1 year later, generating a 30.2% net return to our investors in under 1 year. So this was a great, successful investment here for the Dlp Housing Fund. In our newest fund called the Dlp Building Communities Fund, I'm going to show you the first 2 properties that we are going to be developing and building in the fund. So this is a fund that invests in the building and development of new workforce housing communities. So this is a community called Dream Kissimmee. All of the horizontal site work is just being completed, and this property is going to start going vertical here within the next few weeks. We expect to have it fully complete in Q1 of 2023. It'll be about a $45 million investment. Here are some of the renderings and pictures of what it will look like. 304 units right near Disney World, right outside of Orlando. In addition, the second property that's going to go into the Building Communities Fund is a property those of you with us in the Lehigh Valley, Pennsylvania area are probably quite familiar with. The Boyd Theater is a property we bought, and we're redeveloping the old Boyd Theater and a couple properties next door that we purchased into a new 204-unit mid-rise property in downtown Bethlehem, Pennsylvania, where I grew up and where we have a headquarters up the street. So we will be expecting to break ground in spring of 2022. You can see some of the renderings of what that property is going to look like there. It's going to be a really cool project delivering much needed housing to downtown Bethlehem, Pennsylvania. So those will be the 2 first communities. We have quite a few more in the pipeline to go into the Building Communities Fund. Another cool property that we're acquiring here soon that will not go into one of those funds. It's not a housing property, but because it's a cool property and because we have so many of our investors in Bethlehem, Pennsylvania area, figured we mention this, that we are buying 835 West Hamilton Street office building in a couple weeks, which is an 8-story incredible Class A office building that we're buying for about 1/6 of construction cost. We're going to be doing some cool things with this property. But that's an upcoming acquisition here at Dlp. All right, and here's some interior pictures of it as well. All right, so I'll walk you through a couple of our other investments to give you a feel for what we buy, what we invest in, what you'd be investing in alongside of us if you were investing in our funds. This property here called Dlp Wexford Village is in Scott Depot, West Virginia. I do recognize that probably most of you don't know where Scotts Depot, West Virginia is. This is a community we bought in 2020, right before COVID, for $43 million. It's 340 units built in the mid to late 2000s over 2 separate phases. And so we bought this a year and a half ago. We've done a tremendous job of delivering great service to this local community, providing active assistance to these residents, helping them stay in their homes. And we've done a great job of keeping the community affordable, less than 30% of the cost of the area median income, while generating a really incredible growth in our net operating income through effective management of this asset for our investors. So this property is owned in the Dlp Housing Fund. You'll see what our great property manager, Shane, says about it, who was already working for the property when we bought it, and came aboard working for us early last year. And he said, my favorite part about working here is the ability to positively impact someone's life every single day. That could come to us with something really small and say, hey, I have a work order that needs to be addressed, or that could be a light bulb or a filter or something easy. Or we could have somebody walk in and says, our house just caught fire. We don't have a place to live. We need a place. So the ability, no matter what, every day to impact someone's life is positively awesome. So love that, Shane. Gives you an idea of what we're able to do. It's a very nice community, but we provide a much needed affordable workforce housing. These apartments on average are about $1,100 for really nice quality housing in this local market. This is another property we just bought actually this year in the Dlp Housing Fund. This is 200 units in Jonesboro, Arkansas, and is a property built in early 2000s, actually in 2000, one, two, and three bedroom units, and a property that we're going in and doing some value add, improving the management and service to the residents, and keeping the community an affordable place to live with average rents sub $900 a month, which is much needed in this local market. One of the cool things, showing kind of the way we focus on delivering great, making an impact on our residents and helping them above and beyond just providing housing. Twice a year, we do these big national open house weekends. We have our second of the year starting tomorrow from 12 to 5. And this is an event that we do to give back and create great community. We do a lot of fun and food trucks and prizes and raffles and all kinds of fun for all of our communities. These are all of our communities. So all of our 25,000 plus residents, all of our 200 plus team members who work at these communities, and many of our corporate staff are out, really delivering wow to our residents. And while doing that, we're encouraging our residents to bring friends and family and potential residents to the community. And every time we've done one of these, it's actually generated over $1 million in new revenue from new leases, as well as from our existing residents being so overwhelmed that they renew their leases and stay with us. So really helps. It says our residents fall in love with their Dlp home. Here's a couple of I'm going to give you a couple case studies of what we do on the lending side and how we're able to make an impact through the lending side of our business. And I'll walk you through each of our investment vehicles here. This gentleman here, Dr. Calkin, a company called Calkin Capital out of Houston, Texas, is a great operator. He owns around 6,000 apartments in the Houston market. So far this year, we've provided him 3 loans, or I should say in the past year, over 3 loans for over $55 million. And what he does, he comes into communities that often have some crime issues, some drug issues, and he puts an incredible focus of rehabilitating those communities, bringing in security, literally on-site security, dogs, having a personal hands-on presence, often living at the property that he most recently acquires, putting a great presence to weed out any challenge out of the community, make the community safe for the children, the women and everybody who live in those communities, and completely transforming these communities in a matter of months. It's amazing. I've been out to his communities when he first buys them, and then after he rehabilitates them and makes these incredible, great places to live. Local community loves him. The police love him. Really is truly doing the hard work that most don't want to do to create safe, affordable places for people to live. Also has a really incredible strategy on helping his employees and rehabilitating and investing in them as well. So great example of the type of operator we invest in and the type of investments he's making truly revitalize entire communities. Here's another example of a loan that we have done here this year. This is a property in near Bethlehem, Pennsylvania, in Bath, Pennsylvania, by one of our longtime borrowers named Rocco, and his company is called Manakasi. And what's pretty cool about this, you see this property, this was a industrial sewing warehouse that he converted into 11 apartments. You see the quality of work that he did there. And one of the cool things, and I'm not on time here, unfortunately, right now to give Rocco's whole story, but Rocco came here as an immigrant, initially an illegal immigrant, with a pretty amazing, true American dream story. And when he came here in America, he worked at this building making flags, American flags, for $5 an hour, working 16-hour days, and was able to then buy the building here many years later and rehabilitate it into creating great, safe, affordable housing. You see kind of in that picture there, he actually put a big American flag on the outside of it, and it's got a pretty great story for him, and a great loan that we would be a part of. That was a phenomenal success for him and the local community. All right, so that gives you a little flavor for what we do. I'm going to explain a little bit about how our investment funds work. As it says here, the power behind our passion to make an impact on the affordable workforce housing crisis, as well as the jobs crisis, happiness crisis, and legacy crisis. We've talked a bit about those, many of you in the past have heard us talk about. I'm not going to get into as deep here today, but I am going to give you some good depth on our investment vehicles and help you decide, with having 5 investment funds, which one could make the best sense, or which ones could make the best sense for you to consider. So as just mentioned, we have 5 available investment funds. On September 30th of this year, we launched 2 funds, the Dlp Building Community Fund and Preferred Credit Fund, to join our other existing funds. All of our investment funds are self-mandated impact funds, meaning we require ourselves to invest at least 85% of all of our capital into housing that is affordable for the local workforce and will remain affordable. The reality is much higher than 85% fall into that mandate. All of our funds are open-end evergreen funds, meaning that these are investment funds that we expect to be open for many, many, many years. All of these funds are targeted to provide above market rate returns. We think, especially in this no interest rate environment, pretty incredible returns. All of our funds pay you as investors preferred returns before we earn anything, including our management fee. This slide here gives you a little overview, and there's kind of 2 slides here of each fund and how they stack up, what they invest in. All of this is on our website. We'll share these fully out to you as well. I'm not going to fully go over these slide here, but we have this that we'll send out to you in kind of full format that you can see how each fund compares with one another. All of them paying out monthly and quarterly distributions here, other than the Building Communities Fund, which doesn't have current distributions, but does have the highest returns. But here's a good way to look at our investment vehicles. So if I take our 4 main funds, the Dlp Lending Fund, Dlp Housing Fund, Preferred Credit Fund, and Building Community Fund, we went ahead and we did this in a cool kind of live whiteboarding session a few weeks ago. The link is there, and you see at the top, and we'll drop it in the chat box for you if you'd like to watch it, where I walked through in a whiteboard and laid out, each of these funds across what I think are the biggest criteria that generally people are thinking about when making investments. Returns, that the return that you're going to earn on your investment, liquidity, taxes, and cash flow. And so the Dlp Lending Fund is tied for the best fund with the Preferred Credit Fund for cash flow. So if you want great monthly cash flow, the Lending Fund and Preferred Credit Fund will do that. Double-digit cash flow, double-digit annual returns distributed every month. If you're looking for the highest return, the Dlp Building Communities Fund would be the best fund for you, as a target of a 13% return annually net to you. And the Housing Fund will be right behind it at a 12% annual return net to you. If you're looking for the best liquidity, you're looking to the most flexibility to be able to redeem your investment out, the Lending Fund and Preferred Credit are tied for first with 90-day liquidity and generally even faster liquidity. If you're looking to be an investment that's incredibly tax efficient, both the Dlp Housing Fund and Building Communities Fund are incredibly tax efficient, having the benefits of depreciation. The Dlp Housing Fund also has the benefit of being a REIT as well, and the ability to sell properties and defer those gains through like-kind exchanges, 1031 exchanges. That's a little overview, but I'm going to walk you through each of these funds here for about a minute or 2 each. So first up is the Building Communities Fund, tied for our newest fund. This is a fund that invests in owning real estate, but invests in owning new real estate, new communities. So we're developing and building new communities. This is a fund that, because we're investing and doing the hard work of building new housing, we're able to generate higher returns. because we're building new housing that doesn't have cash flow when we're building it, we don't have the ability to pay out monthly distributions. Instead, we pay out annual distributions, but the highest returns. This gives you the overall overview. 8% preferred return is what you earn before we earn anything. 13% target. A 1.5% management fee subordinate to your preferred return. Annual distributions, annual redemptions. It's a $250 million fund. The Dlp Housing Fund is our fund that owns income-producing rental communities. This is a fund that produces great double-digit returns, tax efficient, and the ability to take monthly distributions. 6% preferred return, what you get paid before we earn anything. Target of 10 to 12% annual returns. The most recent full year, last year, 14.5% returns net to investors. This is a fund that already owns about $1 billion worth of income producing performing properties, annual redemptions, and monthly distribution option. All right, so third is the Preferred Credit Fund. Preferred Credit Fund is our newest lending fund. It's a fund that makes preferred real estate backed loans, but these loans are not all first position loans. In many cases, they will be loans in a second or subordinate position, but loans only to our very highest quality borrowers with the most equity invested behind our loans. In this fund, we're able to generate a 10% return net to investors with a 9% preferred return, our highest preferred return. Again, what you earn before we earn anything, including our management fee of 1%. We pay out that preferred return of 9% every month, and then we distribute all the earnings above 9% every quarter, 90-day redemption in this fund. And last but certainly not least is the Dlp Lending Fund. This is a fund that does only make first position mortgages backed by income producing or by investment real estate. This is a fund we've been running for the past 7 years. This is a fund that produces a 9% plus annual return target, but we've generated over a 10% return in every period for the past 7 years, as an 8% preferred return. Again, what you earn before we earn anything, great liquidity, and all of the income is distributed out each and every month. And then finally, here is the Positive Note Fund, which is, and I didn't realize this was in here, and that's why I called the last fund, as said lending fund was last, because this is the one that's a little different, only in the fact that unlike the other funds, that this is not a fund where you invest as a partner. This is a fund that you actually invest as a note holder, or in other words, you're lending money to the fund, in turn earning a fixed return on your investment, which is guaranteed by Dlp, not guaranteed by the FDIC, of course. These are all loans backed by real estate today. These are all senior secured first position mortgages. So simply put, the way most people think about risk, this would be the lowest risk profile of any Dlp investment fund. This fund pays out a fixed return ranging from 5 to 7.5% returns, depending on if you commit for 1 year, 3 years, or 5 years, and how much money you invest, a minimum being $100,000. Great way to get your feet wet with us and get started with us and getting a great fixed return, an incredible bond alternative, especially considering where bond yields are today. Here's our actual rate chart showing what our rates are based on how much money you invest and how long you choose to commit your investment. We're starting at 5% up to 7.5% fixed return, guaranteed by Dlp. It's going to be a great way to get started with us. It's going to be a great fit again as a bond or fixed income alternative. All of our investment funds now provide the option, which we're pretty excited about, and many investors have been taking advantage of since we rolled this out back in October, that you can set up an auto ACH option with us. We have found and have heard from so many of our investors over the year that they let cash build up, especially those of you earning income right now that exceeds your spend. You build up cash in your checking account or money market account that sits there. And then investors come to us, once a year or once every few months, and they say, hey, I want to make a $100,000 investment. But they sat for months having this cash accumulate, earning nothing. So what we can do is help you look at that and figure out a number. Maybe it's $10,000 every quarter that we will automatically set up to be automatically invested into the fund, allowing you to not have that cash drag and cash just sitting, and allow you to build a really clear plan where we can help walk through with you to help lay out a simple plan with a modest increase to your investment every quarter, where you can have your investment account with us grow by 4 times in just 10 years. So think about that. If we could show you a simple plan that if you invested $500,000 today with a modest increase every quarter, you would have 2 million in 10 years. That's a pretty cool formula that we'd love to show to you and help you automatically, grow your investment vehicle above and beyond the yields on the original investment. And this just gives some illustration that when you take advantage of an automatic addition, how much your investment will grow over time. That being with that simple slight addition here to your investment. All right. So as I mentioned a moment ago, some of you, I know many of you are already scheduled to join us through the rest of our event that we're hosting, our big first ever virtual prosperity, family, wealth, and legacy event, which is part of our one of our memberships here that we have for families and real estate operators. And so if you're not set up for that already, you can join us still yet and join us right when we get done here. And literally, basically, as soon as I get done, we're going to be jumping into my associate Bo kicking us off, and then going into a keynote speech by Lloyd Reeves. And then we got a ton of unbelievable speakers over the next day and a half. So welcome you to join us for that content and evaluate joining our prosperity membership, which is helping families live and leave a legacy. Our other membership we have here at DLP is our Elite Impact Housing membership, which is helping those focused on actively investing in real estate and growing a business to do so. Also want to invite all of you, and you'll of course get emails from us on this, but invite you to what we're calling our Home for the Holidays dinner event back in Bethlehem, Pennsylvania at the Arts Quest, which is what that picture is kind of in the background there, on December 22nd. So myself and a lot of our team members, many of which of us grew up in Lehigh Valley, but some of us now live here in Florida as our permanent home. We're going to be coming up and hosting a live big dinner event. We'll be streaming it virtually as well. But if you're in the area or would like to come join us, we'd love to have you join us live, or if you can't, virtually on December 22nd for a cool different type of event, which I can't wait for. And then coming up in March 17th to the 20th, we're going to have a large live event, similar to the event we're kicking off tonight virtually. We've got a large live event, which we've done a number of these over the last couple of years, focusing on helping you live and leave a legacy, investing in your family as well as your wealth and your legacy. So please get registered for that. We will 100% sell out on this well before March 17th. We can only fit so many people in the venue. So please get registered, come join us. It will be an incredibly impactful use of time, not to mention depending on where you're at in the country, it could be quite attractive to be in 70s and sunny in March, as it will likely be here in St. Augustine, Ponte Vedra Beach area, which is just a few miles up the road from where I'm talking to you right now, where I live. All right. And then to learn more about our new investment vehicles, any of our funds, joining us at one of these upcoming events I just mentioned, getting enrolled in the auto ACH option, you can reach out to any of my great associates here on the screen. All their contact information is there. Unfortunately, with this event that we're rolling right into from here, we don't have time today as we normally do to do Q&A. But again, welcome you to jump on, join us, even if you have to have your video off and and you're going to be doing other stuff. Join us as much as you can for the incredible content we have going on here this night into tomorrow, both incredible speakers and workshop activities, as well as some really fun things like this time tomorrow night. We've got a mentalist, Oz Perlman, is going to be doing an incredible show with us. So welcome you to join whichever portion you can. Have some fun with us, be inspired, and invest some time in your legacy, in your family. It will challenge and help you improve. So I hope to see many of you here in the next session that I'm going to be jumping out of my office into with some of my colleagues in just a couple of minutes, and hope to get an opportunity to chat with you coming up here soon. See you live in March, and appreciate all the time here this evening. And again, reach out to any of my associates here for any questions. Rich, Larry, anything to add there before we conclude?
No, other than we appreciate everyone's time. We look forward to seeing them at the Prosperity event. And again, please do reach out to us. I know there's a few questions in the chat box. We're happy to answer all of those questions for you. Have a blessed evening, everyone.
Thanks, everybody.